Are you looking to purchase vacant rental properties in specific market areas? Then keep watching for info on the different vacancy rates you need to be aware of before you purchase a property. Rental vacancy rates. Rental vacancy rates are usually expressed as a percentage that compares the number of days tenants can rent a property, typically 365 days a year, to the number of days the tenants occupied the property. There are several reasons why your property can be vacant. The unit turn time can create vacancy between the time your current tenant moves out and your new tenant moves in. Other vacant property reasons include major repairs or updates. The rental property is in an undesirable area, and because rental rates are above the average market price. If your rental rates are too high for the property's area, you'll most likely have a more challenging time finding someone to rent a unit. It also may seem ideal to pick a rental property that is in a cheaper neighborhood, but may not be a good idea if you don't already have potential clients. Why they vary. Vacancy rates are vital to look into to see the strength of certain rental market areas. These rates are highly influenced by supply and demand. If you notice a rental market with a high vacancy rate, there could be some concerns there. This may mean that there's a need to upgrade or repair the units, or there may be an oversupply of units. This can be a considerable risk investment if these houses are harder to rent. Factors of varying market vacancy rates include zoning regulations, job growth, job loss due to closures, and business expansions. Keeping them low. Here are some ways to keep your vacancy rates low. Market your units across multiple offline and online resources. Maximize your curb appeal. Screen your tenants to reduce your turnover rates. Prepare for updates and repairs for units that have tenants leaving. Maximizing the curb appeal of your properties is very important. Just like when you have a first impression when you first meet someone, your possible tenants have that same experience with your property. Keep the landscaping neat and make sure the property is always clean. Another tip to keep your vacancy rates is to proactively reach out to your current tenants. If you notice one of your tenants is getting close to the end of their lease, reach out to them for renewal. Offering them an incentive for signing another lease is a great way to keep your properties occupied. Managing more effectively. Knowing the local vacancy of your market area is critical in managing your properties effectively. Predicting your market shifts is an excellent way to manage your properties better. It could be an early property value indicator if you notice an increasing vacancy rate in your market area or a nearby market. Sometimes these shifts are temporary due to a disruption in the economy. For example, maybe a significant employer closed down or moved locations, causing people to move out of the area. Of course, you can only do so much preparation on your end, but it is essential to keep up with any changes in the market so you can make the proper adjustments. Rental property funding. As you now know, knowing the rental vacancy rates of properties in specific markets is crucial to know before you even consider purchasing the property. Vacancy rates have a direct effect on how much income your rental property will generate. If you're ready to start the process of funding your rental property, contact us now.